First of all, congrats New West for putting together yet another fantastic event. I think that the great thing about this community is there's a strong argument that this really is the heartbeat of the cannabis world. So really important to have, I think, today's guests. First of all, the name of our title, the title of our panel, as you can see, is Smart Money versus Not So Smart Money. I'm not sure what that means, but I think these guys can give us, and ladies can give us some insight into it. But first, I just want to quickly introduce our panel, and we'll dive in. My name's Tim Seymour, Seymour Asset Management. I've been investing in the sector for 4 or 5 years, both from a public-private perspective, and continue to be involved in that way, in advisory, et cetera. Want to introduce Eneman, co-founder of MGO-ELLO Alliance. Welcome. Debra Borchardt, the editor-in-chief of the Green Market Report. And Mike Harden, the co-founder of Big Rock. So first of all, I think there's a lot of folks in the room that know 3 people that have been very important in the early stages of this industry based upon the businesses that they are a big part about strategic partnerships and support for the industry. But quickly, I'd love you guys to give a quick background so we can give some context for the folks that don't know you, and then let's dive into this interesting topic. So Mike, quick background.
Hello. Hi, my name is Mike Harden, co-founder of Big Rock. So we started in 2008 investing in local San Francisco-based, anything that was local, organic, and sustainable. So that turned into a lot of restaurants, clothing, and immersive experiences. And in 2016, we launched into the cannabis field. We also have a traditional tech and life science investment background. In the last 20 years, have done about $600 million worth of investments in that intersection of technology and life science in other worlds. In the cannabis space, we've deployed directly about $5 million in various companies, everything from Garden Society, Cocoa Tea, Henry's Original. You'll see us in deep vertical brands. And then we've also advised a good dozen other clients as we sort of find our own path forward.
Great, thanks.
Eneman, CEO of the MGO-ELLO Alliance. I got started in the industry about 5 years ago, launched one of the early venture capital firms. At the same time, looking at the challenges the industry faced, launched a professional services platform in partnership with MGO. MGO is a 40-year-old accounting consulting firm. We launched a dedicated cannabis advisory vertical called ELLO, and over the last 3 years, we've been expanding that to a 360 financial, strategic, and creative services platform. And so we've worked with over 500 companies, pre-revenue startups through to public companies, in all facets of their business, everything from tax, accounting, audit, compliance, to now our investment bank and principal investment vehicle as well. So there's a broad and diverse perspective of how we think about the industry, the global trends, macro trends, as well as local market economies, given that's where we are in the U.S. So just happy to be here and interact with everyone.
Thanks, Evan. Debra.
I'm Debra Borchardt. My background was Wall Street. I was lastly a vice president at Bear Stearns before Elliot Spitzer came in and changed things with fair disclosure. And so if you were in the market, you know that changed a lot for people on Wall Street. One of the things that I like to do.
Kind of ruined it, huh? Yeah. Just, took all the fun out of the game. I mean,
and he
just
went on
kidding.
to nothing. So one of the things that I liked doing there was talking to people about the market and about stocks, and that changed when Elliot changed things. And I went and got my master's degree at NYU in business and economic reporting. I worked at TheStreet.com for about 8 years with Jim Cramer. And during that time that I was there, if you'll recall, back in the old days of 12 and 13, there was a lot of dodgy pot stocks, and that's what we called them because there were a lot of shady characters, a lot of people that just put the word cannabis in their company name and sold a bunch of stock and had nothing to do with cannabis. And so I started covering these stories. They were like journalism catnip because there was drama and intrigue and scandal and big valuations for nothing companies. And so that
sounds kind of like the world today.
Right? And
Sorry,
so that really got my interest. But what happened was back then, and a lot of people are fairly new to the cannabis industry. Back then, if you were a reporter covering cannabis, you were ridiculed. Your peers said, "Why are you doing this? You're throwing away your career covering cannabis," and you were laughed at. And honestly, when I did these stories, I had to do all my other work at the street before I could do a cannabis story at the end of the day. I started freelancing, and 2 years ago, I co-founded the Green Market Report, which is a very hyper-focused website on cannabis financial news because no one was really covering it the way I thought it should be covered, which was like any other industry. And so you can find us. We are online. We are a free website. You can follow us on Twitter, please do, and Facebook, and go check out our website. We have a weekly newsletter that also goes out.
Great, thanks, Debra. So, financial cannabis industry news. You had a busy week, by the way. So let's dive into some of that stuff. First of all, so the panelists, and so we can. I think it would be healthy to get a sense of who the audience is in terms of your cannabis investment experience. And first of all, just quick show of hands. Is this your first cannabis conference? Okay, so 10, 15%. How about people that are actively investing in the sector right now? So about half the room. So I think it's important that we think about it in the context, because again, smart money versus not so smart money. Depending on when you've invested in the cycle of this industry, you've looked really smart or really dumb. And I think the headlines that I bet Debra's written on extensively and people have gotten a lot of insight into this week include what was a big merger earlier in the year that's now come apart. Some people want to believe it's for DOJ reasons. Some people want to believe it's for other reasons. And I think Mike's got some insight into that duo. So I want to hear about that. And then we've also, today we walked in to find one of the big Canadian LPs pull full guidance for 2020 and also significantly downgrade their guidance for the latest quarter. Stock was down 25%. The entire sector, the entire cannabis, if you looked, it was a sea of red, which has now somehow turned positive on the day. So for the day traders out there, again, smart money. For the people,
dead cat bounce.
Right. So I guess the question that I think we're going to try to get to is to talk about where you folks have all been partnering with some of the leading companies in the industry. We've all been investing in some of these companies, and I think I want to define what strategic partner means. And I want to learn a little bit about what you folks are seeing in terms of what happened to that strategic partnership community that we are all so excited about jumping to the forefront. Gary at New Frontier talked a little bit about how they have built a business model that is really about enabling and enabling those strategics to come into this industry. And the exciting thing about what's going on today, despite the fact that market valuations are correcting in a way that they probably should have, is that strategic partnerships have never been more sophisticated, never been more useful. So let's cut right in, Mike. I want to hear, first of all, just because it is so topical, I'd love to get your sense on PharmaCann MedMen and at least what you think that news implies for the sector or what it just simply means about the companies themselves.
Yeah, well, I think you're picking on us because that was one of our anchor positions in our fund was PharmaCann. So we talk about smart money and not so smart money. That's a nicer way to say it. We thought we were really smart 8 months after we did it. We did the deal, and then I think we did around 250, 300, and it got picked up for 685 on paper. And then fast forward, it's been about a year and a half now. Typically after an M&A, you get liquidity after 6 months, but now it's been almost 2 years, and now it looks like there's no liquidity there. So I don't know. We were smart and dumb back and forth.
Well, the point is definitely not to pick on.
No, but that just happened to be.
Because in fact, I think that's an issue for the entire sector right now.
Right.
Which is that the lockups are extraordinary. The capital structures are very complex, and there is very little liquidity in this market, whether you're on the public or the private side.
Exactly.
And so what looked like, first of all, I probably used this expression this morning on my other panel, but look, a year ago in this industry, 1 + 1 = 3. You put two companies together and you were adding value, and there's no question that from a footprint, it was happening that way. What we're seeing is that a lot of companies are finding that the partnership that they struck wasn't as strategic as they thought. And I think that happens in every fledgling industry, and it happens in every industry that's kind of starved for capital. So as we dive into this, Evan, give me your definition of first of all, what you think the strategic partners are in this industry right now. Because to me, when I think about strategics, I think about either companies that are helping to enable the operators in this industry and get them further down the road. I think of big multinational companies that have been on the sidelines and a couple that have made very splashy forays into the cannabis world. And I also think about companies like you guys who are helping companies get down the road to doing what they do.
Yeah, I kind of think about that in really two buckets: value creation and value extraction. And when I think about strategic partnerships, you want to be on that value creation side. And so there's a couple ways to think about that, but there are plenty of opportunistic people in the space right now, opportunistic capital, and that may be needed, and that may be where you are positioned today and back against the wall. But there are other partners, firms that want to create value with you, want to actually partner with you along the way, and they actually can bring something to the equation and not just capital. That's something that we think about in earlier stage startups as they're thinking about their roadmap. It's not just their capital formation, it's also who are they going to work with to extend their network. And if you're thinking about being a beverage company in the space and you think of just get on every dispensary shelf, that sounds wonderful, but that's going to change over time, and the market that you know today is not going to be the market tomorrow. So you want to find someone who understands beverage. So if you're not talking to a VC arm of Coca-Cola or First Beverage, you're probably not going to be positioned very well long term because you don't know what they're looking for. You don't know how they think. So that, to me, and how we think about strategic partners is where you want to get aligned early, and you can get that directly, or you can get that through other people who have been in the space for a period of time that can straddle the cannabis industry experience with traditional market experience. And that's a lot of what you're seeing now is like ourselves and others, they've been around for 3 to 5 years in the cannabis industry. You have a lot of new entrants, and they need a lot of hand-holding, and being able to marry the two of those is really strategic for companies today.
Debra, give us your sense of kind of what the horizon looks like right now for strategic players in the industry. In other words, whether it is the Constellations, the Molsons, the folks that were some of the high headline entrants, or some of the companies that again, you've been covering for a long time that are bottom-up players in the industry. What's your sense on where we are today in a world where the capital markets are telling us something? People are coming together for different reasons, sometimes out of weakness and sometimes out of strength. So just love to hear your assessment.
So because I've been covering markets in general for many years at this point, and I've covered different sectors, I kind of look at it maybe a little differently from just the myopic view of just cannabis. But if you look at what we're seeing in this cycle right now, you're starting to see some carnage happening. Tim alluded to Hexo and their situation this week. Green Organic Dutchman, we didn't mention them, but they also said, well, we've got to do some refinancing on some buildings. Well, lo and behold, there's these slides from an investor presentation saying that these buildings were fully funded. And awkward. So they've lost 40% of their valuation in 2 days. Well, when you start to have that chum in the water, that's when things start to get really interesting in the markets, because now, whether it's private or public, now you've got the vultures smelling blood. And when they start to smell blood, these guys are in it, when we talk about smart money is in it to make money. If they start to see that these valuations are coming down, they've got a couple of choices: either jump on them while they're sinking, or sit back and wait and watch them circle the drain. And when they circle the drain, that's when they will go in. They will wait until they're just done. Now the question's going to be, we've got so much money coming in, new money, that we don't know if the new money is going to be like, hey, that's a great price for that company, and not let them completely, spiral down.
Do we have a lot of new money coming into the industry? Because my sense is that's part of the issue, is that we're recycling old capital over and over again, and then I think that there's because there's just not the type of an institutional profile to most investors. You don't have those deep pockets of investment. But I think the broader investment story is certainly growing, and people are every day, assessing investments here.
Yeah, I think that's the thing is some of the established funds are the ones that are sitting back. But I think some of these newly created funds that are new to cannabis and don't really have the knowledge or know all the players, that those are the ones that might get suckered into a good deal.
Yeah.
But I think that right now, with this bloodletting that we're seeing, it's really hard on shareholders for sure, but I think for some of the companies that are looking to make some acquisitions, they might have a chance to pick up some good stuff.
Yeah, and I'll just add to that because, I think part of it is really understanding where the markets have been. So there's certainly new money coming in. It's highly fragmented, which is really difficult. You can't go to your traditional 10 investors and they fund every deal that you have. You're really stretching out from a very early high net worth stage to a very large family office to a mini institutional, and not just cannabis, but traditional as well. But I think a lot of what we're seeing now is everyone saw the run up very quickly, and it sort of generated a lot of noise in that cycle. So it was interesting, but they also recognized valuations seemed very much out of line with the reality. And now we're seeing those valuations pull back to reality a little bit, and maybe some more. And so investors can start to say, well, there's an opportunity here, and I wasn't willing to look at it before because it was just overvalued. There's not much I can do. And now they can spend a little more time looking at companies, looking at the macro trends, and seeing that this is a significant opportunity, and now is the time to really think about value plays, if there are value plays, or assets that make sense to them. And looking at the companies today, you may overpay for a company that has more value to your organization than not. And so that's something that we're seeing as well, because right now cannabis industry operators don't know really where to value themselves other than looking at public market trends, which was clearly the wrong way to do that. But I think there are plenty of investors who can add tremendously more value than operators can on their own. And so it's still a value market for them as well.
And to go back to the question of PharmaCann, you also have this situation where the liquidity isn't getting recycled. So we would love to be recycling to be exiting MedMen stock and recycling that capital into new deals, but that hasn't happened, and that's happening on and on. And on the flip side, I think from a catalyst perspective, you do have pending catalysts that should bring in new capital, whether it's the Safe Banking Act that's passed the House, hopefully passes the Senate, whether it's incremental new investment banks. We've seen Canaccord, we've seen Cowen step in, we've seen B of A bring in an analyst. So it is happening along the path. And then can't forget CBD. If you expand out from THC into CBD, you see, if you add that, I would argue that you probably do see more capital coming in. It's just split. You have probably no recycling of existing capital because it hasn't been liquid yet. 2, you've had a pause in new people coming in. And 3, you've had an expansion of opportunities. And so people who were on the sidelines about THC now have this opportunity to participate in CBD. Seems a little less risky, maybe not.
But Mike, so that's really important because you're talking about kind of where we are versus where we were. And you guys, Big Rock's been at the center of this industry, certainly in this town from the beginning. Are you more fired up by the investment opportunities you're seeing right now than where we were a year ago? Whenever you want to say was the peak for the market, it was either in April or it was possibly even in July of last year. But Mike, these companies, that. Some of the companies you guys are invested in, some of the companies you guys are helping support, their businesses from an operational efficiency perspective in terms of the sophistication of what they're doing? I mean, talk about that.
Better every time. And we've always played sort of an arbitrage game. We were late to the large MSOs. We were not in that first wave of giant roll-ups. And so we've always kind of taken that approach that we're looking for a Blue Bottle coffee, not a Folgers, and try to play that spread between what's a multi-billion-dollar company doing $20 million in sales.
Is Folgers even still made? I mean, is anybody drinking Folgers these days?
It's Nestle now.
Okay, sorry.
I think it changed its name to Starbucks. But and so so we've always played that ARB game, and I think we're starting to see that play out. One thing people don't talk about is that the available. There's huge appetite to invest in cannabis. We see it from private wealth managers all over, from all the big banks. They say, don't email me from at my Goldman account or my Morgan account. Yeah. Email me over here, my private. But my clients are asking for exposure. And yet the only exposure they can really bring them is a big, ugly MSO that you don't even know what they do. It's hard to run a dispensary and run a grow and manufacture products and do 10 things really, really well. And what we've done here in the Bay Area and in California is grow individual brands that do one thing and do it really, really well. Now those valuations are 30 to 50 to 100 million because their sales are 5 to 10. whereas and they don't have access to the public markets. And I think you'll see that gap grow. I think you'll see those companies who are focused on building profitable business, putting up good numbers, trying to stay where they don't need new capital. All these other MSOs, most of them, I think the market's not telling you that we're not interested in cannabis. They're telling you we're not interested in these kinds of cannabis opportunities, which require incremental new funding every
Massive
6
CapEx,
months.
massive
Right.
OpEx.
And inorganic growth. It's all just roll-ups.
Well, and again, we're talking about smart money versus not so smart money. Maybe when it came time to list in Canada in the fall of 2018, smart money was, let me see if I can put my footprint on 9 states, even if these assets don't mix together or there's no coordination, or I'm going to have 9 different heads running in 9 different directions. So were they smart money or were they dumb money? I mean, they were smart because they got out there, they generated liquidity, they generated some critical mass. And right now, without any new money coming in, it doesn't look so smart. Debra, what's your sense, first of all, just as we talk about the carnage, and I'm sure you have your finger on the pulse also of what your readers are thinking about and care about and are probably interacting with you. What would you say is going on right now from their perspective and the sentiment here? What's the sentiment meter reading?
They're pissed. I mean, they're just.
Look at me. I'm just.
I mean, it's pitchforks and torches right now. The shareholders are angry. They're angry. They feel they've been lied to, and quite honestly, they have. I mean, when you've got Hexo out there saying we're going to do $400 million in net revenue in our next fiscal year, and then they come out and say, "Oops, my bad. We're only going to do 46 to 48 this year." Even if they doubled that, which is unlikely, you're nowhere near 400. Like, who? 400 million? What? And I feel like. Plug for Green Market Report, I feel like that's kind of the thing that we try to do, is not roll with those pro forma numbers that a lot of these companies want to spoon feed you. And a lot of reporters, they're just giving you what they've seen in the press release because they don't have time. And, MedMen's been touting their pro forma numbers with PharmaCann for how many quarters? 2 quarters? It's all you see at the top is pro forma number.
Let's stop picking on Mike here. I mean, come on.
And I'm not.
It's true.
But
we're disappointed.
And that's just because they're in the headlines this week. And T-God saying all of a sudden they need to look at new financing for these buildings that they told us were fully funded. So, yeah, I think you're going to see a lot of lawsuits coming into the play here. This is, I hate using that word chum again, but you've got a lot of securities lawyers that are ambulance chasers, and the minute they see something like that, it is come to mama, because they've got this stuff that they can just spit out like a machine and just start suing all these companies. So now, on top of all your other mess you're dealing with, these companies are now going to have shareholder lawsuits to contend with, and not one, because you're going to have at least, probably 10 law firms in New York that's all they do is spit out shareholder lawsuits. So I feel like it's going to be hard to get that retail trader back to the table because they feel like they've been ripped off. And right now, I think that dead cat bounce that we saw was some of these guys just stock jocks playing the market.
And let me just say, we're here at the beginning of the mid-market corridor. Twitter's up the street, Uber's up the street, Yahoo's up the street, Airbnb, et cetera. And we'd be remiss if we didn't look at what's happened to WeWork, what's happened to that was going to come public at $80 billion, and now it's not coming public at all and has lost its CEO, et cetera. So this isn't completely unique to cannabis. The truth is that a lot of the IPOs this year, whether it's Lyft or Uber, the others have been a disappointment. And this isn't. You look at that dichotomy between tech and cannabis. In technology, companies have been staying private longer and longer. Facebook didn't come public till it's 100. Uber's been around for 10 years. Palantir still hasn't come. And yet in cannabis, people are rushing out to be public before they even have, basic safe disclaimers in their presentations. It's really fascinating to see that.
Well, and you've got these weird combinations like the Tilt Holdings. I mean, there's another, mess, hot mess, and right, that was a hot mess. Like when you saw that thing come out and that they had rolled up these 4 companies, I know probably half of you in this room went, "What?" And then they're trying to explain that to
a
us,
multi-hundred
and
million
we're
dollar
going-
write-down within
weeks. And then now they said, "Oh, and by the way, we've got some of our founders to forfeit their options," which was just a kind of like to go, oh, like I was saying, the securities lawyers are about to come, and beat them up. So that I was told that was just to try to get the securities lawyers off their backs, kind of like a throw that hurdle out. But that was another, talk about, merger combination that made everybody go, what? Like,
Well,
it made no sense.
So perversely, it actually sounds like a really exciting time in the sector because we've seen a lot of investment structures that have gone belly up. We've seen, it's not like any of us needed to pay tuition at this university, but we've all paid tuition, every one of us here. And I've been investing in emerging markets which are illiquid and restricted and have regulatory constraints on them for a long time. And some of these things are exactly what happens in these environments. But the good news for the market is right now but most importantly for investors is that there has been a comeuppance. And it's been a painful one for some people, but companies are being forced to become profitable. So Mike's point, it's critical. Story stocks aren't being sold these days. So you can't have structural lack of profitability and expect to raise money. And you could have. And it's not, the other thing that we all need to at least be wary of is we still really haven't had, outside of December of last year, November, December, where obviously we did have a major pullback by any historical measure in global markets and in the S&P. Financials were down 17% through December 24th. But you can be sure the cannabis markets, if we see anything close to that, and we all know what the risks are to markets now, and we're all probably getting somewhat even inured to hearing about trade war and political concerns that are only just starting to get into the market, valuations that don't make sense, leading indicators, the stuff that I talk about on TV every night. I mean, look, the economy is not in a place where you should be rewarding stock valuations right now. Cannabis hasn't even begun to digest this stuff, other than what Mike's talked about. But the other thing that you come to learn is that the best times investors to make the most money is when things go from terrible to just really bad. So where are we, guys and ladies? What part of that spectrum am I in? And is it? But for people that are allocating capital, it should be a very exciting time.
Yeah, I mean, I think it's a super exciting time right now, and unfortunately, the pain has been felt by retail investors. You've had a lot of irrational exuberance and a lot of showrunners rather than book runners, and that's been unfortunate because it's diluted the understanding in the market of what cannabis and hemp broadly can be. We're just not there yet, and so people have been exceptionally optimistic. Not that they shouldn't be, but there's also the current dynamics in the marketplace today. So I think that's something that has hurt, but ultimately is just a matter of timing, and also because it's hit retail investors, the institutional investors who are now looking at the space, they don't have that overhang. So they can come in with real capital, they can help move the needle on an industry that really needs that. So that's really exciting. And again, you got to think about this as a very early stage emerging market. So there's going to be companies that are at every edge of the spectrum of new entrants that will scale very quickly and will do so in a very measured way. You'll have those that try and push really, really fast, and that's fine. And then you'll have those that have been on the top end of the spectrum, the MSOs, the sort of financial roll-up strategies that are going to have to really figure out, are they the right operating entity? Do they need to split off assets? So that's really exciting for investors. There might be really strong performing assets that are sitting in very convoluted, confused structures that might be very worthwhile for other investors in the space now. So, I think it's exciting seeing the entrepreneurship from traditional industries enter, the level of professionalism continue to increase. It's just an exciting time, and I think the markets will bear that out over time. Just be a little turbulent along the way.
So I want to talk about the government's role in our industry, and are they maybe calling them a strategic partner is a bit of a stretch, but ultimately, I actually don't think the FDA is the bad guy. For example, I think the FDA needs more power, and I think the vaping issue is one that's complex, and I think you have different regulatory agencies that need to figure out what their lane is. So I want to hear from you all who have enormous insight into this, whether you want to address vaping head on, or whether you want to just talk about either the legislative calendar that we've just gone through with the SAFE Act, whether you think there's follow through on that, but talk about the role of regulation in the industry, because it's an industry that actually is embracing regulation, is always wanted to be regulated so that it could then deliver consistency, safety, predictability, and an ability to access the consumer.
I mean, I'll start, and I'd say that honestly, regulation is the barrier to entry, especially for the startups in the venture stage. That's really what prevents people from entering the market, and that is what allows someone to create value. It's a ring fence that allows you time to create value. So while regulation is painful, it is your friend in the early stages. Otherwise, you'd be facing competition from everywhere, all over the place. So it's this delicate balance. We'd be remiss if we didn't address the vaping. And to Deborah's point about lawsuits on the SEC and the investment side, we haven't even begun to see the class action suits associated with the vaping crisis, and I don't know how we don't get those. And so it's a shame that those will probably come out. And again, that's the one thing we're seeing from the vaping crisis is I go back to when Tesla had the nasty car and driver article. If Elon had needed to raise incremental $50 million that week, he would have been out, right? Now, he managed to get through the bad PR and go through and raise capital, but there was a moment in time where that company might not exist. And we're in that for the vaping crisis, regardless of how it will shake out. The truth is, we all probably know that between now and 5 and 50 years, people will still be vaping. That's probably just a fact. And yet, we also know there's going to be lawsuits. And between now and whenever there's some definitive answer, I see industry groups, I see state regulators, I see different people trying to come in and answer the question, but there needs to be some definitive top-down. This is what the FDA does. And until that time, it's a vulnerability for anybody in that market because the lawsuits will be there and there's no playbook right now. So I think and you see that playing out in the capital markets. So we get more calls from people in the vaping industry now who are looking for that capital bridge. And I'm not sure everybody's addressed it yet inside. You need to be taking action. You need to be spending money on compliance, spending money on research, et cetera, to show, in the same way that these guys are giving up their warrants and options just to kind of show, hey, in good faith, don't come after us. I think people need to be taking those actions.
How many asthmatics in the room? All right, just a couple. I don't think we would fear inhaling particulates if we didn't have that in market already, whether you use an inhaler, a nebulizer, or something else. So when you think about vape, that's really what we're doing. We're far from the R&D that's needed for it. But to think that regulation is a strategic advantage for that industry, it is. We want to have compliant products in market. If you take away regulated compliant products, you have the issues that we have now. Illicit market operators who will look only for profit motive and will not care how they impact people. So regulations is actually a strategic advantage for those that want to think about it that way. And you don't normally think about compliance as a value creator. In this industry and most regulated industries, it is, because that is the moat that you can create. And if you think about that now in your operations, that's super helpful. And what we've seen is a lot of companies have not been doing that. They've been focusing on purely top-line revenue growth or financial strategies to, make themselves look bigger than they are, but not really thinking about compliance. And Mike's right, and I think we're all right. We haven't seen the lawsuits yet that are really going to cripple companies. So compliance is the reason why people will either be able to operate or not, and probably more so in the next couple of months than capital alone. And so that's a big part. And I think for those that want to think about their future, especially depending on where they sit, if they're anywhere plant touching, if they don't have a good understanding of what that means, even from an investment strategy, then there's still going to be a lot of challenges for them up ahead. And
Evan, can you backtrack to just your view of the FDA's view and opinion on vaping? I'm just curious because it sounds to me as if you feel that not only is the industry itself obviously want more regulation and want more legitimacy, but the FDA, as they've looked at vaping over the years, for the most part, their view has been this has been value added from a health perspective.
Yeah, I mean, I certainly agree on the value add with the caveat that we need more research. I would tend to say if we're going to have concerns around vaping, I'd probably have concerns around sugar water or chemically flavored nicotine and other things. So I'm not so sure that we shouldn't be focusing on the positive attributes with the controls around it rather than limiting what people are going to do because they're going to do that anyway.
Debra, just your thoughts on regulation and how it will drive or inhibit investment at this point, where we are.
So, I mean, if we do get the Banking Act passed in the House, in the Senate, because it got passed in the House, obviously that's a great green light for the industry because now you bring in an issue that's been holding the industry back, which is banking. I think with the FDA and vaping, some of the companies that were all in on vaping and maybe didn't diversify their portfolio of products, they're really going to be hurt. We may see some go out of business because they were not planned on having a quarter that sucked. And what we're seeing is some of the vape sales are slowly starting to return. But at the end of the day, people died. People's children died. I mean, can you imagine if that was your 17-year-old kid that died from vaping? And that's a big responsibility that maybe some of these companies didn't think through. It's really hard to know what really caused it. We feel that, my opinion, these kids that are sucking on Juuls every 5 seconds because it's got mango flavored, that's a problem. And the politicians were just so happy to report that kids smoking cigarettes had fallen. So they didn't care that they were juuling like crazy. They wanted to be able to go back and say, look, we got child smoking rates down. They just didn't anticipate that that pendulum was going to swing, and now they were going to have this horrible issue. I think once we get more information as to what has happened to these people that have been affected by this product, then the companies can address it in the sense of the products in my cartridge, I can guarantee you are only from this organic farm. There are no fillers. There's nothing additional. So if you're a company that can get that message out that your product is okay, then I think then we're going to recover. And I think the regulation, having these people that have been doing these fake THC cartridges, and they busted a family in Wisconsin that were doing it. I think if we really go after them and really put the law against them, that's going to help too. But listen, I mean, other industries have been through this. Tylenol, remember when somebody put the stuff in the Tylenol and they struggled to recover? I think that we will recover, but it's going to be whether these companies can weather the storm.
Well, as California knows as well as any state, the black market has been absolutely enabled, not put down. Yes. I mean, it's been enabled by a perception change, a criminal justice change, at least on the here and the now going forward. And so most people don't care. And therefore, most people don't care that an illegal shop shows up, or most people don't care that, illegal business is operating, because it's a sense, oh, well, they'll eventually get their stuff right. And no, they probably won't, because if you're operating illegally now, you haven't grown up in an environment that said you have to be as compliant as possible as this industry. So any insight, by the way, on the vaping sector and the players and how people are faring here? There's a couple companies I think may not make it, and they've already been discussions of capital markets dynamics that mean they've lost control, are going out of business, or maybe going to get swallowed up. I mean, any thoughts on this? Because again, there's huge opportunities in here for a couple people that will remain strong. Obviously, PAX was vilified when they did, not vilified, but they raised a lot more money than they told people they were going to raise. Well, guess who looks smart now? Even though, my PAX investment's getting marked down dramatically every month, and I'm not sure I'm getting that valuation from them. Any thoughts on the sector as it's playing out here?
Yeah, I would just go back to, it's funny, on the revenue side, we actually see some of the better players that we've spoken to, again, on the smaller California-based operators, but we've actually seen their sales go fine to up in most cases if you're still gaining share, especially if there's an opportunity and you've got a better quality product. That said, I don't know when I could look an investor in the eye and say, oh, now's the time to jump into vaping, right? You can say, okay, the capital markets have been washed out for cannabis as a whole, and it's time to come in. I don't know when you say it's time to come in on a pure vape company. I think that's the reality is that's a question mark. As much as I believe it's probably going to work itself out, et cetera, we need a definitive answer. This is one of the time I see multiple groups trying to solve it and trying to come forward, but I don't think they have the power. I saw 100 vape companies come together, and that was a good start, and put out some research. But I feel like this is why we have an FDA. This is when you need a definitive, and the first word out of them wasn't great, right? Which is stop vaping. Let's just, that's what they said. They said stop vaping. So it's scary, and I think it challenges everyone to cannabis has been this great underdog evangelism story where, being part of the industry, there's all this great feeling about bringing medicine to people, et cetera, and now we have to check ourselves because vaping isn't. It has some questions about it, and that's as an investor, that's a hard thing to.
Yep.
Yeah, I was going to say that's one of the big messages that the industry has been putting out is nobody's ever died from smoking pot, and now all of a sudden you've got people that have died. And yes, we know it's because this weird vitamin E thing got in there, and who knew?
Maybe.
But now you've got this really tough message that the smart folks are gonna, we know those people, but they take that ball and run with it. And when you're in the cannabis industry, you kind of end up in this bubble of information, and you forget that there are people in many other states that don't know this industry very well, and they see, a picture of a kid with a sign that says, I'm in the hospital in ICU because I vaped and I vape THC. That's a hard message to get past. So I think we as an industry have to, get the better message out there. We won't have that until we have this information. And to Mike's point, I think with vape investing, that's going to be a tough one. You may be able to find some good values in there, but it's going to be hard to know who's going to be the survivor in this battle.
Yeah, and then the flip side is we're seeing new, just like on the venture side, there are new things. Go back to the original packs, which is a flower vape. We see things like the Omora and other products starting to come out. We've seen a little bit of boost in the beverage side with people saying, I'm going to do more of an alcohol replacement as opposed to a cigarette replacement. So as bad as it is and scary at the moment, there are other people who it's giving them their time. There are also a lot of people who have been in this kind of regulatory game. We got Merrill up here up front. We got Roshi Systems, other folks who've been out there, saying, hey, you guys need to pay more attention. We need to pay more attention to quality. We need to pay more attention to quality and supply chain. And this is a moment. Some people died. And this is a moment for any company to be making those kinds of investments now. And so it's an opportunity for that ancillary side.
And I'll add a point to that. So I think the question around who can survive this as a vape company, whether they're a pure vape company, a technology company, or a brand, and how they're messaging that brand. Do they have enough trust with their consumer base? That's going to be important. So there are a few, to Deborah's point earlier, companies that have been pure single product companies, but some of those single product companies have been very focused on their brand, and they may stand for something more than that singular product. And that's one of the largest California-based, traditionally vape companies, but it really is positioned well because they have a good mind share of portable dosing. More so than anything else. And so they're able to pivot that if they need to, or they're able to be patient with some of the vape-related issues, but their brand can hold strength in how they bring other products to market. Those that are exclusively vape or not able to do that, they will probably struggle because they'll need a significant amount of capital to ride it out. So that brand strength will help those who are either not diversified, but they can diversify because of that brand strength.
Yeah, and I think in California, there are those players that are going to get the stamp of approval, and they're going to be better off for it if they get through this.
Yeah, and look, if you see a branded product from California that's a vape company outside of California, 99.9% of the time it is counterfeit. It is an illicit market product. So if your friends, cousins, nephews, whoever are telling you they got the best new hot California product, and it's not in California, and that brand has not already set up licensing and partnerships in that state, it is not a regulated, tested product.
I mean,
So-
and that has sparked this whole, the counterfeit code people that are, there's a couple of
Yeah.
software companies that have come up with these, it's either a chip or a QR code. It's a little cumbersome because you have to go up to the product and scan the code, and then you can tell whether it's the product that it says it is. So it's a little cumbersome, but to what Mike was saying, when you have these situations in the market where you have something bad happen, it can often flip into an opportunity. And that's now all of a sudden it's a couple of companies, I can't remember their name, but it's now created an opportunity for these companies to go, hey, if you buy our product, then we can make sure that customers know it's a real thing and not a counterfeit.
Well, it's the good news here is, again, it's focusing attention on best regulatory practices are going to be best practices for companies. So we unfortunately have about 2 minutes left. So what I would love to hear from each of the panelists is both you are all strategic players to the industry, whether it's to companies, whether it's to investors, you've all played this role. Just assess how you're feeling right now, and either your best move right now, Mike, and because it's we've been a little bit sober about the outlook, but I think the reality is it couldn't be a better time to be forging partnerships.
And the truth is, we're having this conversation. There's a lot of angst over these machinations of the market, but I believe that if you were rolled up the entire cannabis market cap of all the publicly traded companies, it's still less than Uber's failed IPO and where they trade at. So just to put that in perspective, and that over the next 5 to 50 years, everyone from the Pope to the Prince to the President is going to have a stance on cannabis. Every Fortune 500 company will have to have a cannabinoid strategy, whether you're in beverage or you're in face care or whatever it is. And so we know, I was here when Amazon came public, and it was, they missed the first couple of quarters out of the gate, and it was a tiny peanut company. And I look up, and I've traded in and out of it over the years, and damn, it's almost $500 billion and did hit $1 trillion. So we've seen that wealth creation. Apple, the same thing. And we all knew when the iPhone came out in 2007, think about that, 11 years ago and 12 years ago it came out, and that company went from trading around cash. At that point it was around 30. They had 20 billion on the market on the balance sheet, and now again close to over $500 billion. That's an amazing wealth creation. I don't know why that wouldn't happen in cannabis, despite all the things that are happening and all these machinations. So sometimes I get in the weeds, and then sometimes I pull back and I look at the states where you can't even buy a licensed product in New York State right now. Think about that. You could be in Manhattan and you can't even buy a product. Goldman Sachs can't even touch one of these deals. On and on. We have to be early, right?
Thank you.
Yeah, I mean, for me, it's pretty simple. Just be patient, be smart, be diligent, and find partners you can trust. Build those relationships now. There are a lot of people who have been around for a long time looking at the space. Whether you agree with their strategy or not, they've seen a lot, and that's very valuable if you're getting into it now. And I think that patience and building trust is really important.
I would say in Wall Street, there's a saying about catching a falling knife. And we would have thought that the vaping crisis was really it, and that we were kind of bottoming out, and it seemed like we were. But then now we've had these companies with these come to Jesus moments, all of a sudden, and that's taken us down for another leg. I mean, I feel like right now is actually a buying opportunity. I can't call a bottom. None of us can. But it does feel like we've flushed out a lot of sellers at this point. Again, you can never call a bottom, but it does feel like that there are some good buys here. And I think if you do your due diligence and really look at the company, or you go the safe route with an ETF. I wonder if there's any good ETFs out there, Tim.
I don't know. I think there's a couple.
Tim
I
has
didn't plant that sales pitch.
I know he didn't plant that in. But I tell that often to people. If you're a little too nervous and you don't have the time, because it takes time to look at a company and really kick the tires, look at the ETFs. That's often a good place to start. And again, listen, I worked on trading floors where when a disaster happened, whether it was a natural or man-made, those guys were not sitting and watching the news. They were trading because they were buying on the days that the markets were down. They were buying when everyone else was freaking out. They were getting to work because they were like, oh, now I can make some money. So
That's great stuff. And so in conclusion, I'm not sure that we've seen blood in the streets yet from a capital markets perspective. And unfortunately, there are great companies that are going to go out of business because of the regulatory structure. And therefore, I really do hope, and I do think a lifeline will be a SAFE Act that includes capital markets and even allowing endowments and pensions to make investments. And the encouragement I get out of the last 6 weeks in Washington is that there's a recognition that this is something we have to do. So as I waved my friend Jill, who's kicking us off the stage, I just want to thank our panelists very much. Mike, Debra, and Evan, thank you very much.